Bitcoin has shown some significant strength over the last couple days. Will the buyers continue to push Bitcoin upwards, or are we going to see the bears step in? How are the macro charts developing, and why this weekly candle was of absolute significance? These are questions we're answering in today's video. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a deep dive into the short-term and macro price action, going over exactly what is happening with the price action, what you should be looking at and paying attention to, and of course, what we should be expecting next. With this, we'll be going over various macro charts as well, discussing the total cryptocurrency market cap, Bitcoin dominance, and even the Bitcoin chart on the macro scale. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll not only get access to our main VIP channel where we post all our trades, you'll also get access to our group chats, our general chat, trading chart and education chat, help, daily video, trade setup, and news chat. If you're interested in getting access to all of that with over 600 members, you can contact me in the pinned comment of the free channel. For more information, click these links. Let's go ahead, guys, and jump on in. So let's take a look at that market data to start off with. 24-hour volume is down 6%, sitting at a total of 99 billion. 24-hour liquidations are down 0.74%, sitting at 85 million. We are expecting liquidations to increase and volume to increase as we do come out of the weekend for the USA. Looking at 24-hour liquidations, we can see 43 million have come from long positions and 41 million have come from short positions, giving us a preliminary indication of what the short-term price action has been like. And this indicates there has been some up and down chop in the last 24 hours. Taking a brief look at the last 24 hours of price action, we can see we have seen a decent amount of sideways consolidation. This is like a slow grind upwards with some decently large-ish swings on the short term, not in the higher time frame. The swings have been very, very tight, but on the short term, we have seen swings of around close to $2,000, which again attributes to those over-leveraged positions on the short term being liquidated both on the long side and on the short side. We'll come back and discuss what is happening here on the immediate short term in just a moment, and we'll discuss much more in regards to the short term as well. But moving over to the broader markets, looking at the DXY, again, the DXY has broken down from that 2-month-long uptrend we have been discussing. Again, while we do remain underneath this uptrend, we are expecting continuations towards 103. We are now retesting our neckline level of support, which is this rectangular box you can see over here. This is going to be acting as a last level of support for the DXY. A breakdown underneath this level will confirm the fact we are going to see a continuation lower. At the moment, we are very much primed for a continuation lower. However, we do have that one final little bit of support we do need to break down to get that confirmation that we're going to see that continuation downwards. Again, provided we do remain underneath this uptrend, the likely direction is down, but it is not off the cards that we could reclaim that uptrend provided this horizontal support holds. Of course, a rally on the DXY is bearish for risk assets, and a correction on the DXY, generally speaking, is bullish for risk assets. Moving over to the broader markets, we can see the S&P 500 has again closed out a pretty good prior weekly candle. Its currently weekly candle is opening up red, not too much cause for concern. Again, once more, provided we hold this 5,000 level, we are expecting macro continuations toward the upside. And if we look at the macro scale, that's really all that matters over here. If we do want to see a continuation lower, we do need to clear this 5,000 level on the weekly, meaning close a weekly candle underneath 5,000, and that should result in a high time frame downtrend initiating, which could take us to that 2021 high point. Again, Again, the upward direction is more likely provided 5,000 holds. The same goes to the Dow Jones, guys, right over here. 37.7 to 38k is that major level of support. A breakdown on the weekly chart results in a correction to the 50 EMA and potentially the 2021 high point. Provided we remain above the support level, we are expecting macro continuations upwards. That is it for the broader markets. Let's go ahead and discuss really quickly what we're going to be talking about today and then get into it. So we're going to be taking a look at Bitcoin on the immediate short term. What is happening to the price action ever since we broke out of this downtrend? What reaction have we seen in the price action? Are we going to see a continuation here for Bitcoin, or is this area here going to act as a amount of resistance, and will we see a correction? We'll also be taking a look at the broader picture, the bigger picture, discussing this higher time frame channel, the key levels of support and resistance you need to be watching for, and again, the trigger points for trend continuations or trend reversals. Can the bears reclaim control? And if so, how could they do that? Are the bulls continuously going to push the price action upwards? And if so, where are we looking? So the big questions are going to be answered. We're also going to be taking a look at the total market cap. We're going to be taking a look at the weekly chart, and we're going to be taking a look at Bitcoin dominance. So before we get into all of that, a quick word from BitGet and BingX, and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into the chart. Starting on the short term, discussing the current range, the recent breakout, what the price action is doing on the immediate time frame, and the key levels you need to be paying attention to. So within the last few days, Bitcoin has had a fantastic rally. Of course, we know that we bounced from that $57,000 region, again the $57,000 region as represented by the VRPV. We saw a decent amount of support at this region, indicating it was our support between our breakdown and our 52k region. Again, a pivotal bouncing point for Bitcoin, which we did manage to bounce from, confirming the break below 60k as deviation to the high time frame range. Again, indicating bulls were able to step in and push the price upwards, and the breakdown was unsustained, showing significant weakness on the hands of the bears. At the moment, the price action has continued toward the upside, breaking out of a 4-week-long downtrending diagonal resistance, as well as the breakout on the 4-week-long downtrend diagonal resistance. We have also seen a positive momentum shift on the RSI, and we have the price action above the downtrend. At the moment, this is validating the 3 out of 3 rule we look for: strength, structure, and trend. Strength, positive RSI, indicating we have positive strength. Structure, we have got, again, a falling wedge pattern break upwards. And trend, the 4-week-long downtrend has flipped upwards. So we do have a positive uptrend as represented by that trend line. So we have 3 out of 3, strength, structure, and trend, indicating the breakout has been valid, and we have not unsustained, we have a sustained breakout as of right now. So the big question is, where is Bitcoin going next? What are the key levels we're looking out for? And how is the price action developing ever since we broke out of that downtrend? Is it preparing for a continuation, or is it showing exhaustion, which could result in a failure to sustain above this downtrend and a re-entrance into a new downtrend? And where would it go if that occurred? So these are questions we're going to go ahead and answer. Let's start off, guys, by talking about the higher time frame. Let's get the higher time frame out of the way. So obviously, when we have a downtrend break, we have a new uptrend develop. And the current uptrend is going to be represented by this thin uptrending diagonal trend line. This is going to be our short-term uptrend we have been developing. And therefore, we can expect the current trajectory of the price action to continue upwards to our next level of resistance, which is going to be the 67K region. We have got double confluence of resistance over here with the midline of the high time frame range and the double rejection from the 67K region. This is going to be a double confluence, okay? This is going to be our resistance zone. So we can expect the price action to continue in an upward trajectory towards that resistance, provided the price action is able to sustain above this uptrending diagonal trend line. A breakdown of that uptrending diagonal trend line would indicate the short-term price action has re-entered a short-term downtrend. This is an expression of weakness and exhaustion, which could spill over to the slightly higher time frame and result in a breakdown of the 4-week long diagonal trend line and a retracement back to the 60K region. So provided we remain above this trend line, we are expecting continuations upwards. Let's go over the bullish case scenario. Provided everything remains bullish, which again, we have the positive momentum shift, we have the strength, we have the trend, we have the structural breakout, we have the price sustaining above the short-term uptrend, we are expecting a next target for Bitcoin to be 67,000. And as we just mentioned, 67,000 is a double confluence, meaning it is an area of interest that has 2 points of validation of significance. We have a double rejection and we have the midline of the high time frame range. The midline of the high time frame range is simply the exact middle point between the range low and the range high of the high time frame horizontal structural consolidation we have been in within the last 2 months. Thus, a break above the midline puts us in this bullish territory of the channel, and while we sustain it below it, we are in the bearish territory of the channel. Now, these channel verifications, bullish or bearish verifications, does not indicate the direction of price action, more so the probabilities of a range high or a range low retest. I'll give you an example. If we are in the bullish territory of the channel, a retest of the range high in comparison to a retest of the range low is more probable. Where if we are in the bearish section of the channel, a retest of the range low in comparison to a retest of the range high is more probable. And thus we are expecting a retest of the range high only when the $67,000 region breaks. At the moment, from a structural and a technical perspective, we are expecting a move toward that level. So let's go ahead and go into the short term and really discuss what can trigger a continuation of 67 and how that price action is developing on the short term. So we're going down to an hourly chart now. What we can see, guys, is again, within the last 24 hours, we've seen a little bit of short-term chop. We've seen some upward movement, we've seen some downward movement, but on the short term, we can really get a good understanding of that uptrend, that diagonal trend line that we're holding above. We can see that diagonal trend line once more over here. Now, what we can see is, again, the price action has been slowly moving upwards. And I'd like you to really note over here, with this slow gradual movement upwards, we can see momentum has been falling, okay? Now, this is not a sign of exhaustion, as we do have absorption in the price action, meaning we are still creating these higher lows. We have a higher low here in comparison to here, so we do have this uptrend developing, but we do have momentum falling. So this cooling off period, okay? What does this really mean? Well, it means that the buyers are still in control of the price action, but they are finding a decent amount of resistance over here. Now, that is perfectly normal, as if we do zoom out to the 4-hour chart and bring up that VRPV gap, the VRPV indicator, we can see we are testing the POC level of the high time frame range. The POC level simply indicates the price level on a horizontal scale of the largest amount of historical orders within the current visible range, indicating this area that we are retesting is actually a pretty significant area of resistance. And when we do see resistance, we see volatility drop. Okay, when we see volatility drop, we see momentum exhaust, and as a consequence, we see the price action become slightly indecisive, and we see more sideways chop. But even with all of this, we can see we have these higher lows developing. Now, if we want to see strength reclaim, If we want to see the price action continue aggressively upwards, we do need to see, and by aggressively upwards, I mean a continuation to 67,000, okay, this is the next target, we need to see two things. Number one, we need to obviously see a break over the prior high. This is sitting at a price point at 64,500. And most importantly, we need to see momentum flip positive. We need to see a short-term RSI break upwards, indicating a positive momentum shift, which would result in, again, the range of structural consolidation, even though it is upwards, has been expressing exhaustion in the short term by, again, a decreasing momentum as a result of decreasing volatility, as a result of being in this high resistance range, okay? For us to see significant strength to push the price action through this range, we're going to need to see the RSI flip. And the RSI flipping positive will be a good leading indicator that price action and the bulls are stepping in to push the price action upwards. So if we do see that happen, we are expecting a retest of 67,000. Again, like we said, if we retest 67,000, we're going to be retesting that from a position of strength. Why do I say so? Well, look at this, guys. First retest was again the first retest, obviously actually technically our first establishment, but our first retest of the trend, because it takes 2 points to establish that horizontal level, right over here was in a downtrend, where we're in the downtrend. We were still under that downtrend trend line as we did so we retested it from a point of weakness, whereas if we retested over here, we'll retest it from a position of strength. So the probabilities of a break upwards as a consequence of a retest again is higher than a rejection. And thus, if we do retest this level, we are expecting a breakout. And if we do break out, then we are expecting a retest of the range high. So that is the bullish case scenario, guys. Pretty in depth there. The bearish case scenario is two things. Now, number one, for the bearish case scenario to begin, we need to see a breakdown of the uptrend. Simple as that. If we break down from the uptrend, we are now in a short-term downtrend. The bearish scenario is beginning. There are two scenarios. Number one, if we see a breakdown and a strong continuation downwards. And by a strong continuation downwards, I mean a breakdown of that prior low point at 65.5. That would result in a continuation to 52K. If we see a breakdown, but we do not reach this low, instead, what we do something like this. We create a higher low. This is still going to be bullish. So provided we see a sustained price above this prior low, we are expecting macro continuations upwards. And as I said, both of these scenarios, both bearish scenarios, are incredibly unlikely right now as the price action is developing quite bullish. That is the high time frame on this chart. Let's move over. So, taking a look at the weekly, guys, like we said, we have just seen confirmation. This is super bullish. Confirmation of a support resistance flip of the initial 2021 high point, excluding deviation. Remember, this was the 2021 high point. We saw deviation from the high point, which resulted in an all-time high in 2021. But if we're looking at this initial high, what we have seen now is a lot of people were scared that we were going to see let me just go ahead and delete this. What a lot of people were scared of, they were scared of a top, they were scared of a top, and they were scared of a triple top formation over here. They were scared of this resulting in a top for Bitcoin as a consequence of deviation. But what we've just had confirmation of is that confirmation that this is not a deviation above high. What this actually is what we've seen is a support resistance flip, okay, of the prior high point in 2021. So a lot of people were comparing, this over here to this over here as deviation, but instead what we have seen now is we've actually seen this level hold as support. So we've seen a support resistance flip rather than a confirmation of deviation. Thus, these two have no pattern significance. They have no similarities in terms of pattern right now. These are completely different scenarios. And again, we can back that up by all of the technical data in the world. And we have done that in prior videos. We are very, very different. This time is very, very different in comparison to this. This is not a top. This is a healthy correction to support. This is preparing us for a continuation upwards. Again, for this to invalidate the uptrend, a weekly close under 60 needs to occur. Simple as that. Weekly close under 60, then this is defined as deviation. Then we expect a downtrend to continue. Until then, 60k is that major support we are still holding. Total cryptocurrency market cap, guys. If we look at Bitcoin market cap, very similar. We're still retesting a pivotal level of support, which is going to be this level of resistance, okay? And it is now an area of support. Remember, prior resistance becomes future support. And again, we have retested this on multiple occasions. In fact, we've had 3 weekly candles retest this in the last 4 weeks. And every single weekly candle has resulted in large bottom side wicks, which indicates we have significant support, significant willingness to buy from the bulls, pushing the price action upwards. Again, guys, we remain above the support. We are macro bullish. We below, we are bearish. It is simple as that. You don't need to be more complicated than that. While we are above here, the markets, Bitcoin, cryptocurrency, altcoins, whatever, are expected to continue aggressively upwards. And you should be positioned in accordance to that. The moment this candle is broken on the weekly chart, those probabilities shift in favor of a downtrend, and that is when you start to rebalance your portfolio to reduce your risk and exposure based on developing narratives, okay? At the moment, I see absolutely no reason to expect this to continue anywhere but upwards. Moving over, Bitcoin dominance. Not going to go into it too much. Keep it very simple, guys. We are retesting a prior area of support. Support becomes future resistance. We have seen the opposite occur here now, okay? It is normal, this is the opposite, as is the dominance chart. What we are seeing here, if we do see a continuation downward for Bitcoin dominance, provided the total market cap increases, which again, we are expecting it to, we are going to see an altcoin season. We're going to see an altcoin season, and it's going to be a very, very big altcoin season if that is the case, okay? It's not going to be as big as the 2021 altcoin season. Now, the reason I say that is, look how much the 2021 altcoin season dropped. We dropped from like, what, 70% Bitcoin dominance all the way down to 37. Now, if we were to see an altcoin season develop from here, we're only going to be dropping from around 56 to around, 40, 37. That is like a whole 20% different in terms of dominance. So we're not going to see as big of an altcoin season as we did in 2021. I don't think we're ever going to see an altcoin season as big as 2021. That was absurd. But we're still going to see a really, really good alt season if we do continue downwards. So thank you for watching, guys. I'll catch you guys in tomorrow's video to look at the macro charts again in the short term. I'll see you then.